Everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 31st of the 10th, 2024. My name is Richard Lee and I manage the stockradar.com.au website for you. I'm actually recording this last night because I've got a busy day tomorrow and I couldn't record today, so I'm going to be looking at the markets as they were last night. Some of the charts haven't updated, but with not a lot of movement last night. The All Ords, or the ASX 200, was actually down about 70 points, 68 points. Money dragged down by the leaders, the banks, Telstra, Woodside, Woolworths, Coles. They were all off pretty badly. So it was money and leader-driven fall off. Some of the stocks I've been looking at weren't too bad. So we'll have a look at some of the markets from overseas. And we'll look at some stocks as well this week. Jumping on and off a trend, I'm really talking about the simplicity of doing that. It's just about having a disciplinary process to know when to take your signals to buy and when to get off. And it's not a matter of picking those tops and bottoms. It's a matter of identifying the odds of an existing trend starting, being established and continuing on so we can jump on it. And then we ought to identify the fact when it's likely to stop and turn around and sentiment might be changing, price action's changing, or a stop goes off one or the other. So it's a simple and safe process. Aim to achieve a positive return on your investment. That's what I'm trying to do. We always stay safe, minimise those losses, run those profits, which is the name of the game. And I'm going to show you one of our trading centre groups, a diversified finance group, just to give you an example of some of the stocks we're running at the moment and how they're looking. So we'll have a look at that. But first we'll go to the overseas markets. Not a lot of change last night. The Dow, it's still making new highs. It has had a bit of a thump down last week, so there's a bit of a shock there, but we've had plenty of those thump downs and the buyers have come back in and whacked this back up again. So we're still seeing plenty of buying here, so no real concern at this stage. We talked about the 10-year note last week. Sort of it's a move that's happening, which is really not surprising me too much. It looks like a big base is happening there in the interest rate market. So although we're coming down a bit now, it's just a sort of a counter move that we're not too concerned about. And neither of the markets. The Nasdaq's making new highs at the moment. It was ticking on high. It's starting to establish itself in a new high process, in a new high level at the moment. So we can start whacking out that support bubble because we may move another leg higher in the Nasdaq, okay? And that's looking very good with the volume as well. The S&P is trading nicely higher. It's just started a little bit. Not too bad as the Dow has, which had a bit of a thump down. A couple of big stocks whacked that one down, but the main indices are still okay for the moment. Okay, our market, as I said before, had a 70-point drop today, which has brought us just down below 8,200, around 8,180. I think we are. So not too bad here. No real problem with the trend here. We've got the higher highs and higher low process continuing here, so that looks fine to me. Gold is also jumping to new highs. Every week it's a new high at the moment. It's having a good run again this week. Brent crude, it's having a bad run again this week. It's back testing that support again. And, it may drop through there. I know the petrol pump's gone up again today. I don't know why. For some strange reason, maybe it's getting close to the weekend, which they always do. But the Brent crude price is dropping again, and it's in that low point that it's been for the last 2 years, down around $71. So, and it's giving that a big testing. And as I said before, the pressure is down here. The highs are lower. It's below the average. The only thing that's holding up is this bit of support, which we did see a bit of buying come in there, but it did die pretty quickly the last couple of weeks. So not a lot of hope there really for Brent crude. The trend is still down. Okay, so that's the overseas markets. We can now go to the trend intensity count. The top 10 trend intensity ratings, and mostly it's the metals ones that are in there. Some of those smaller miners I pointed to you last week have been doing pretty well, especially the goldies. They're knocking out the big miners, they're pushing them aside and running higher. So dangerous market, I know. So just be very careful. Watch your stops. Keep them reasonably close if you can. I know they're volatile sometimes and they can knock you out pretty quickly. So there's not much I can do about that. But they're the ones there. We've also still got stocks like Qantas, Rare Group, ANZ still there, AUB, and some of the other stocks we've got here that I'm going to look at today are also doing pretty well. So there are still plenty of good trends running well for you at the moment, despite the downward move by the index today and some of those big stocks. Okay, so the stock pick count is in fact down. We did lose 5 stocks last week. So we knocked out a few, took a few profits, took a few small losses. But all in all, a pretty good trend. We just paired back a little bit here. We're back now to 50 stocks of 153 stocks covered and 16 ETFs of 20 ETFs covered. So stock pick count's not that broad as we have been seeing for quite some time. Okay, so now let's go and have a look at some of the stocks we want to look at. I'm talking about trends at the moment, okay? So I'm going to look at half a dozen stocks here that have just got great trends at the moment and why we jumped on them and what we're doing with them at the moment. So you can see here, Aristocrat made a new high here. The whole high was back in 21. It's made a new high here. It's looking pretty good. It's jumped through around $48, $47. It's now above $60. The volume has been quite good, mainly green bars here. Momentum's been really nice and steady. This has been a very, very nice steady rise. A nice one to just keep your stop loss going up, which is the simple strategy we have. We buy the new high and we follow it with our stop, okay? So this one is one of the ones we're running at the moment. We didn't cut this one out. It hasn't made a loss. It's making a profit. So the trend intensity rating was 8 last week. It's probably going to move up to 9 or 10 with a new high this week again. So Aristocrat's really performing pretty well. And it does trend very nicely, Aristocrat. So just raise your stop on that one and keep comfortable in there. Suncorp, another one which is doing pretty well. It's had a very steady up move, a bit like Suncorp. We saw a nice little new high made back here in early 2024. Okay, so this is probably going back to February this year. So it was around about $14. It's now up around $18 or above $18. And it's been a pretty steady trend up through here. A little trend line running along your moving average there. Plenty of good supports to put your stop loss there. And again, it's running at trend intensity running of 8 last week. And if it holds its gains this week, it's probably going to move to a 9, maybe even a 10. So some calls kicked along quite nicely. And these steady trends are just so easy to follow. And they don't always happen, but they do. And when they do, it's really nice to see them. And you can just lift your stop loss week after week. So we've jumped on this one, and we're not ready to jump off this one as yet. Another one, Technology One, it just keeps outperforming this market. We've seen the jump up here from May at $16, $17. It's now $24. And it really hasn't had it's had a couple of down weeks, but really it's been a very, very steady uptrend. So these are the ones we like, okay? These are the ones we jump on, and we haven't jumped off it yet because it's still trending up and all the signals are good. The stop's in place, it's well above the average. The volume is okay here. It's sort of tapered off a little bit here, but that's not too much concern. I think people get a bit reticent about the higher prices. But momentum is still very good, still very strong. So there's really no choice with these stocks. You just hold them and you just raise your stop. And so this is 3 stocks we've seen running nicely. Insurance Australia is one that's, we can just probably blow this one up a little bit here and see what this has done for the last few years. And I've shown you this chart again, but the main thing is this beautiful uptrend we've got here. But it's underpinned by that beautiful downtrend accumulation uptrend phase. Okay, the cycle of stocks that go through all the time. This is now in a nice uptrend phase, and it's gone on for a long time. This is quite a long trend for me, but it's still performing well. It's still going up to above our stop. We've seen a bit of selling into the market here. It's temporarily stopped here a little bit. The all-time highs are up here around here at about 850, 860. But for the moment, it's run from our entry point at around 540 up to about 740. So they've got $2 there in the last 12 months, 18 months, 12 months, 15 months basically there. A nice trend reversal, and it moved up there quite well, and still running an uptrend of higher highs and higher lows. And these are the trends we follow. Okay. So that's IAG. Then we've got a little miner here, which is actually doing pretty well. We saw the jump up here above the highs through here. A nice series of highs here, which often triggers that market imbalance. These sellers need to turn back into buyers, and you get this fairly quick jump higher. Now, I know this is propelled by the gold price, but it's a double whammy there for me. Everything's aligned there. We've got good volume. Momentum's very good. We watch it very closely because it is a miner, it is a gold stock, and we know what they can do. But it's jumped from the entry point up around here, around about 418, and it's now about 520. So we've locked in about $1 there at the moment, and hoping that will continue on as the gold price looks good. Okay, so another stock that's starting to trend higher, and I don't know where the main resistance is on this one, but it's certainly a lot higher. It looks like it's up around 620, so another dollar or so potentially in that one for the moment. So that's probably up around the all-time highs, I think. So Evolution looks good. just the one I want to mention from last week. So they're the main stocks I wanted to go through today, just showing you how you can jump on these trends and jump off them when they signal. But these ones haven't signaled that, and we've got some really good profits in here locked in there. So there's been good trades for us all the way. Now the other one here we're looking at here, I just bought the book today because I'm fascinated by Qantas and what's happening here, and I know that we need to have a carrier. But I don't think Qantas has been very nice to its customers, and I think it's cost us, we all pay some top dollars for the share prices here. There's the all-time high back there, just below 750, which we've caned through at the moment. We know the government's doing very nicely, getting nice little lucrative seats and things like that, and freebies there. So there's a nice little cosy monopoly going on there with Qantas and the government, and we are suffering a little bit on that one. However, if you're worried about it all, don't worry about it. Just buy the share price because it goes up and you make your money on the share price because it's looking very good. We've got good volume showing there. Momentum's very good. It's above the average. It's making new all-time highs. This will move to 10 again this week. So I can't really say much more than just raise your stop and watch it rise further. Okay, so it's still continuing higher. And a little stock I want to have a look at, which I looked at a while ago, but it's had a long time on the downward swing, and it's recovering quite a bit, but it's a very good chart because it's quite classic. We've got this beautiful distribution pattern up here and these three tops here which eventually failed probably here and then failed badly with this low here, which drove it into a serious downtrend from $14 down to about $4. Savage blow. You don't want your portfolio to be hit by a stock like that because we know how long it takes to recover from these sorts of losses. You've got to get out of them, and that's what we do. We jump off these trends when they happen, and we jump on them when we can. So this one here's had an accumulation pattern, a really nice accumulation pattern, which it broke out of, and we can see some volume here. If I just push this up a little bit, it's a little bit of a thin stock, so it's a bit hard to sort of gauge sometimes, a little bit flighty, but we've got some good green bars through here driving this, and it moved into a nice uptrend phase here and got to the highs again, and now we're starting to possibly get this sort of pattern here again where we're getting up here. We've failed again here just in the last couple of weeks, but we haven't really given up the ghost yet. We're still holding above this low here at $9. It may break through. I know the consumer staple stocks and the discretionary stocks had a pretty rough time today, so the online's a little bit different, but it's still selling goods and services to us, so that's probably why it's come off a little bit. But it's certainly worth watching, I think, TPW, because if it does get through, it could be quite an exciting stock to follow, especially seeing we've got this big downtrend accumulation, and uptrend cycle going on, and these uptrend cycles can continue on quite well. So certainly worth watching. It's got a little bit sleepy at the moment. This is a bit positive, so it's a little bit mixed. It's sort of erring on the positive side because the trend is still up, but it's hit resistance and come off there, so it's certainly worth being careful there on Tableau website. I'm not doing anything at the moment in there, but if it does break through there, I might whack a little bit of my trading account and see how that goes. Okay, so they're the stocks I want to cover for today. It really is about those main stocks I was talking about. Aristocrat, Suncorp, Technology One, Insurance Australia, there are plenty others. Prometheus is nearly a $200 stock. It just keeps going and keeps going. We love those stocks, and that's what our aim is, to get onto those stocks. If they don't go, we get out, but if they do go, we just follow them and follow them and follow them, because that's what stocks do. So we like to get onto those stocks when we can do. So that's all I've really got for the stock situation there. We look here at the slides I've got. Really just wanted to show you the trading centre here. One of the groups here, the Diversified Finance Group. These are I cover about 25 stocks in here, but these are all the ones that I'm holding at the moment, and these are all at the top of the trend intensity ratings. You can see here, if you look down here, you can see all the entries and exits here. These are current prices from last week. So stocks like PMV are quite a lot more. That's about $34, $35 at the moment, and it's recovered a lot off there. But generally what we've got here is you've got some building profits there, 23%, 32%, there's an 18% one here, and the losses we try and keep small, so they're still pretty minimal at the moment, but this is sort of the profile that we developed there, and if any of those smaller ones start dropping more, we knock them out, and the ones that are going well, Macquarie Bank, Netwealth, Suncorp, we just keep raising the stops on those, and they keep pushing higher. So that's how they do it. So that's just a simple example of the trend intensity table, running those profits and keeping those losses small. Okay, and that's how we monitor things. It's how we keep abreast of what's going on with all our stocks. So it's all there for you to look at and monitor yourself. And the key part, and what anyone will ever tell you to making these things a success, jumping on and jumping off a trend, is having your own rules, having your own key entries and your key exit points. Don't listen to anyone else, what anyone else says, because it will only confuse you or distract you from what you want to, from what you're trying to do. Okay, so for me, I follow a consistent, systematic process. It's the same all the time. It gives me the right signals, not always, but for the majority of the time it does. I employ strict risk management, as you know. 15% is my absolute cutoff, because once you start getting below 15, 20, 25%, the amount you need to get back to recover those losses starts to get too hard to recover back again. So drawdowns aren't really a very nice thing to cover, especially if they don't come back. And some stocks don't come back, be it Temple and Webster or whatever, which came down from $14 to $4 or whatever it was. So you've got to be really careful about that risk management side. Much rather get out, take your loss, move on. It's mentally liberating. You don't want to carry that baggage of losses in your mind all the time, and often those baggage of those losses end up in the bottom drawer and you try and forget about them, but you can't do that because you're losing money. So that's risk management, and the main thing again is to have the discipline to follow your signals. There's an article this week that I cover in the newsletter, which is coming out tomorrow. It discusses the choices we make when we follow a trade plan. There are choices we make about following our trade plan and not following it. Why do we do it? Why don't we do it? I discuss all these things, and it's actually a very easy thing to do to make the right decisions. We just need to control ourselves. So I talk a bit about that, and in the issue after that, I'll be talking a little bit about another aspect of trade plan discipline, things like that. So really important things. In fact, it's probably the most important thing we do when we trade is having the discipline to follow those signals and make sure, because we know we kick ourselves when we don't. Okay, so that's about all I've got for you today or tonight. I hope tomorrow's a good day and better for us. A lot of those stocks that I covered today, Aristocrat's up today, Suncorp was down a bit, T&E was up again today, Evolution was up a little bit today. So our stocks weren't too bad today. Nothing like the 68 points down on the ASX 200, which wasn't so good, as it's mainly driven by those leaders, many of which we're not in at the moment. Okay, so that's about it today. The main one, as I said, is that the best strategy you can follow is your own strategy, because that's the one that you will win at if you follow it. So you don't stray off that and don't listen to anyone else just because you feel like it. So make sure you follow your strategy and listen to it all the time. Okay, so watch your trends, heed your stops, stay safe, make sure you have fun, and I'll see you all next week. Thanks very much.